We'll start with the DXY, which was pretty bullish last week, but we did turn pretty bearish as the week ended off the back of NFP, which I quite like, to be honest, because I was looking for some retracement. It has made things look a little bit ugly on the higher time frames, especially with the candlestick closures. We have left behind a pretty big wick there on the last weekly candle, which does imply all the momentum we did see last week didn't really sustain. And the fact that the wick is pretty much bigger than the body is, of course, a sign of rejection there. Now, we could go fill the wick, and I kind of expect us to do so, but we also have to be quite cautious as well. I'm looking for a pretty big retracement here for the DXY, because I do look at the market. To me, it looks very fatigued on the way down, and we have shifted structure. We've gone from making lower lows and lower highs to now making higher lows and higher highs. So I am looking for a higher low to form and then a continuation to the upside, but I'm being very cautious after seeing the rejection we just saw on the higher time frames. So dropping to the 4-hour chart, I like the buys, but I'm kind of looking more towards this area before taking any positions, looking for a pretty deep pullback, especially looking at how price kind of formed and set up here. We had a very impulsive move to the upside, followed by a very impulsive move back down. This is your textbook kind of inverse V-shaped pattern, which tends to mean more downside. So I do think dollar is likely to keep falling, but I am still looking for that higher low and looking for a bounce in this area, which is where our last area of demand is on the 4-hour chart, around 97.8. So I'm looking for a bounce in this area. Now, I'm not necessarily looking for a bounce all the way back to highs and beyond. That would be a lovely swing if that was to happen. But I'm being quite cautious again because of the aggressive nature of that reaction after NFP last week. If I can get a push back into, let's say, this area where we've got some resistance lurking, I think that could be a nice trade, and then we'll see where we go from there. Maybe we break through, maybe we don't. But this is a really aggressive reaction. It's not like a slow corrective pullback, which would imply a lot more upside. It's a really aggressive one, and especially taking into account that the higher time frame trend is still, for the most part, pretty bearish as well. So you got to be extra kind of patient and considerate of that trend, especially when we're trying to look for buys and go against the trend. So I still like the buys. We still do have this bullish structure in play. Nothing has necessarily changed that. It's just that we're quite aggressive on the way down, which tells me one thing, we're probably going to get a deep pullback. And the second thing is we might not see that big continuation all the way back to highs and beyond. So I'm looking for a bit more downside for the dollar before I do start looking for some buys. And that is pretty much the same situation with Euro. If I expand to the weekly chart for EURUSD as well, you can see the same situation. Nice bearish engulfing candle, but did leave behind a pretty ginormous wick there. Probably about 55% of the whole candle is wick, which is again showing rejection. And if you look to our left, we had a pretty nice wick on this weekly candle not too long ago, which was acting as resistance, and now of course acting as support. So we've got a wick into that area, rejection, wick into that area, possibly could see a rejection or a continuation of the trend. So this is why I'm quite cautious with shorting Euro, because we are respecting support and possibly we could see some more upside from that area. So being quite careful, dropping to the lower time frames. We do have, of course, this bearish structure which we're looking to trade, but we are looking for, or at least I am anyway, looking for a much deeper correction. You can see this looks like a big V-shaped pattern, very impulsive on the way down, brief consolidation, very impulsive on the way up. This is textbook V-shaped pattern. Now you can expect more upside off the back of that. Originally, I was looking for the retest of this area to short Euro, simply looking for the break and retest of the prior low. But again, after that pullback, it's really aggressive. I'm not wanting to be shorting that straight away after that aggressive momentum. I would expect price to actually break through this now. So my next area of interest for Euro is pretty much all the way up here. Lovely consolidation. We did see price spill over with quite aggressive momentum. So it would be nice to see price pull back into that area. Of course, that was our last lower high at the first high here. Drop, low, creates the second lower high. Another drop creates another lower low. So the plan is still the same, looking for a lower high and for us to spill over. But I'm just waiting for a much bigger pullback, taking into consideration how aggressive we were on this bullish move here. So yeah, Euro still bearish. Quite cautious because higher time frames, I can see the possibility of us continuing this higher time frame bullish trend. So staying a little bit cautious, not looking for a crazy bearish move here. I like the momentum we saw in this leg, which keeps me confident with the bears because this was a very, very strong impulsive move. It wasn't like this move here, which was very corrective on the way down. This was quite aggressive, a lot of momentum, broke through lows with ease. So I quite like the shorts from that perspective. But after seeing the rejection and where it is rejecting, I'm going to be quite cautious with the shorts there for Euro. As I said on the weekly analysis, maybe a push into this area makes the most sense for me. And then we call it a day, or maybe we do see some more downside. But that's about it I'm looking for Euro, which we can be pretty confident with. As for pound USD, I still like the shorts for pound. Lovely head and shoulder pattern last week. And we did see the continuation of that. If I expand to the daily chart, you'll see it a little bit better. So, of course, there's your left shoulder, there's your head, there's your right shoulder. That's your neckline, and, of course, price smashed straight through that. So now the plan is, can we find a pullback to keep shorting this, to expect another lower high, just as we did over there, and keep shorting this to new lows, or at least a pushback to this low. Again, you've got lovely support here, which we turn resistance. That's kind of where I'm looking to short pound USD from. So pretty much just waiting on a pullback. Actually, let me mark up the level first. Pretty much waiting on a pullback into that area roughly. Now, pound USD, again, pretty aggressive reaction. Not as aggressive as Euro USD, but still a very aggressive shift of momentum. So I do think, again, pound's likely to see some more upside. But I'm still happy to short from here. I don't necessarily need a much deeper correction like Euro, because Euro is quite aggressive, pound not as much. So I quite like the look of this level at 1.338 or 1.34 we can call it. And depending on how we react with this area, I think this could be a really nice place for a short. And again, keeping it simple, back to lows would be a healthy target for this trade. And of course, the plan is just looking for the next lower high. So pound USD, still pretty bearish, still looking for more downside. As long as dollar can still see some strength, that should help pound USD fall. Lovely bearish leg there. Simply just looking at the pullback of that leg to keep shorting it. You got the 0.5, 0.618 in that area. That would be a brilliant place for a short. So just waiting to see if we can get that retracement. I think we will. It just comes down to how we react. If it can justify an entry based on the confirmations. If we do get that, great. We'll jump into some shorts and ride it back into the lows. But that is the plan there for pound USD. Dollar CAD, another USD pair, still pretty bullish on this one. We have come back into some tasty support, which could definitely give us a bit of a bounce. But I'm quite cautious with dollar CAD, especially on the weekly chart, because we have some major we just kind of floating above our heads right now. So as you can see, this was a major resistance. I remember discussing a lot about this level when we were trading here, when we got the breakout. Then, of course, price broke back within the level, and now, of course, it's turning resistance. So I can see a world where dollar CAD does see some upside to come back and test the level, only to come back down again. So I'm quite cautious of that area, not necessarily looking for a long-term move. You can see also dollar CAD left a pretty big wick there as well. So not seeing much sustained momentum with the USD pairs. We were quite bullish for most of the week, and of course, NFP kind of skewed that up very well at the end of the week. But for now, especially with the breakout of the consolidation, you can see prices being back and forth in this area for dollar CAD for quite a while. Finally, we've broken that to the upside. As long as price doesn't close back below that level, the buys are still valid, and I would still expect a swing to the upside back into 1.39, we'll call it. So still pretty bullish on dollar CAD. If we drop to the 4-hour chart and look at how price is moving, it's still quite flat, really aggressive candle there. So I do need to see some really healthy rejection to give me the confidence for a buy, because again, that was a very aggressive bearish move. It's not like a slow corrective pullback as I would like to see my pullbacks. In that manner, nice slow corrective. That shows to me that, okay, it's most likely going to be a pullback, and then we should see the continuation. If it's quite aggressive, I tend to be quite cautious, as we have here, very aggressive move. So I want to be cautious. I want to see really strong evidence of price holding onto this area, wicks, strong shift of momentum to the buyers. Then I would be happy with some entries. At the moment, we're kind of just a little bit flat right now. So we'll see how things develop. Things can change pretty quickly. We might even fake the level as well, so keep an eye on that. But essentially, just looking for this area at 1.376 to hold as support, then looking for buys back into the high. If you do break through and especially get a daily candle closure below, this might be a big fake out, and that could open up the door to some shorts on a retest for us to spill back over. So watch out for that. But for now, we've got the breakout. Just looking to see if we can get a retest and a continuation. So keeping it very, very simple. As for Aussie dollar, I quite like the shorts for this one. We did, of course, break out of that ascending channel. And now I'm essentially looking for more downside off the back of that. So this is the ascending channel. We cleared that last week. Now I'm looking to see if we can come back for a retest, support, turn resistance, maybe retest below the trend line as well. And from there, possibly we might see price spill over. I'm looking for us to achieve this support area around 0.635 at least. I think we can go further, but as from a trading perspective, I think if we can get a push to that area, that would be fantastic. So pretty bearish in Aussie. We have broken out the channel, so naturally I do expect more momentum. I do expect us to spill over. But when we are in an ascending nature like this, and we do eventually get the breakouts, normally it's quite impulsive. Normally the breakouts are quite big, and if you can catch them, they can actually be really nice trades. But yeah, it's the same situation here with the other USD pairs we just spoke about. Really aggressive push. Now we're approaching that support level, turn resistance. Can we see some healthy rejection here? If so, great. Get into some shorts, back into the low. You've got this low to target, and of course, you've got the level I just mentioned there on the daily chart as well. So shorts look really good for Aussie. Again, I need to see some really healthy rejection first because momentum's with the buyers after the NFP reaction on Friday. So I do need to see some evidence of some rejection, wicks, and price really finding it difficult to break through that level. If so, if I can see a nice shift in momentum, nice bearish engulfing candle, especially in the 4-hour chart, I'll be happy to enter some sells. Then yeah, I will be looking to ride that lower back into these areas. If price does break back within the channel, that's when I kind of back away. We've got another fake out on our hands. I won't be bearish at that point in time. But for now, yeah, I do think we can still spill over. So Aussie dollars is a good one to watch, especially if you're interested in shorting the USD pairs. New Zealand dollar on the other hand, not so much. This one again did break out the channel, similar to Aussie dollar, which we just spoke about. But again, it's not the best breakout in the world, and the opportunity is quite minimal here with New Zealand dollar because this is the support level which I expect price to get to, which is not too far away. We're already coming back for a retest right now. Possibly there could be some intraday shorts just riding momentum really. Again, for New Zealand dollar, you don't want to see price break back within the channel. That's a bit of a red flag. But if we can find some resistance here, that would be nice. But then again, you got that big bullish candle right next to you. I'm not too sure if I want to be shorting that unless I see some very strong rejection, really exaggerated wicks maybe. So New Zealand dollar, I'm not the big fan of. We already had a big drop as well, so I don't really want to be shorting at these prices without really strong rejection. It does really imply that, okay, we tried to break through, but we're fading. We're fading quite aggressively. We're seeing wicks, strong shift of momentum back with the bears. Then maybe the shorts could look good, but I think Aussie looks a lot better, so I'd rather put my eggs in that basket. But it's another USD pair. As long as we can hold this as a resistance, I do think we can roll over. So I can understand people keeping an eye on it, but not my favorite USD pair, I must admit. And pretty much consolidation as a whole, to be honest. So we're not free flowing as some of the other USD pairs are. As for gold, so gold, I am pretty neutral on gold for now. Again, the overall uptrend still at play, great, bullish from that perspective. But we are quite flat and still rejecting resistance here. So being very cautious. We've got support in this area here as well. I gave out 2 areas where shorts look good coming into the week. I said this level up here where we've got the daily highs. I think that's still a nice place to short from. And the second area I said was this area here, which is not as good, it's not as prominent. Again, when the market is ranging, you kind of want to be as high as possible. I always say, if you can sell at the highest possible price in the range, naturally you're going to be in a great place. Same with the buys. If you can buy at the lowest possible price within a range, you're going to be positioned well. Not that you're guaranteed walk away for winner, but if it does play out, you're maximizing your returns and you're placing yourself at the best area possible. So in this case, you kind of want to be at this level or even higher as well for gold. This is also a nice level. I like it because resistance here previously, we broke through, broke back below. This could be a retest for a push back down, especially if you're looking at intraday opportunities for gold. I think that could be a nice short. But if you're looking for a bigger swing, then I would wait for 34.40 around that level there. But gold is flat. So my biggest kind of advice for gold is don't get sucked in with momentum and sucked in with big candles, because when we are fluctuating, we are going back and forth, momentum is not being sustained. So be very, very careful about trend following opportunities when we are as corrective as we are right now. So gold is flat, just looking to sell high, buy low really. 2 levels to keep an eye on. This is more for like an intraday trade. I wouldn't look to hold a big swing from here. That's where I would be more confident to hold a big swing. So let's see if we can get up there as well. But yeah, gold for me, just really flat. Not looking for any kind of big move there, to be honest. And silver's interesting. We're still trading within this consolidation, which I do think we can see a rally from. I like what we're seeing on the daily chart. Wicks kind of developing there. Looks like momentum's picking up as well. It was a very aggressive drop we had there for silver, so I'm being quite watchful of it. I do think some shorts can come into play, but I would keep it short term. Momentum is still very much with the bears. With the bulls, sorry. With silver, so I wouldn't be looking for any big drop for this pair, but I do think coming back into these areas, depending how price reacts, I think we can see some nice selling opportunities, which could last for a day or two, maybe at least a push back into the low and then possibly walk away from there. So I quite like the sells, really aggressive drop there for silver. We had an aggressive rise, but didn't really sustain much, and price came back down just as aggressively. So I kind of like the idea of a impulse pullback, another impulse to the downside. You've got 2 levels to keep an eye on, 37.6 and 38. And depending on how price reacts with one of those 2 levels, I think shorts look good in these areas. It's healthy pullback, but whip at the fib from the high to the low. You got the 50%, 0.618 in that area. That could be a nice pace and added confidence for the trade.